right, everyone. Welcome back to my live stream. For those of you who are tuning in for the first time, my name is Ali Telford. I am the creator of the course Stock Trading Simple Beginner Guide, now available on Udemy. I'm also the author of the book Better Thinking Habits, the Introduction Edition, which is now available on Amazon in ebook as well as paperback format. Both links to my course on Udemy as well as to the book on Amazon will be in the description below. These live videos or these live streams are part of a package deal that you get when you sign up for my course on Udemy. You're guaranteed at least 6 months worth of access to my live streams where we will be picking stocks, reviewing our previous stock picks, as well as answering any questions you may have in regards to stocks that you may want to pick. As of right now, I am going to be scheduled. As of right now, all of my live streams are scheduled Monday through Thursday from 7:30 p.m. Eastern Standard Time. Today is June 23rd, 2025, and we are going to go ahead and get started as we normally do. First thing we're going to be looking at is our economic calendar, which is on investing.com. On our economic calendar, we're going to look at what's coming out for tomorrow. And tomorrow we have just a few things happening, but we do have one major event that's going to be happening, which is right here at 10 o'clock. Fed Powell will be testifying and also answering questions. This typically lasts about 2 to 3 hours, depending on how many questions they have. First, he releases a statement, then he answers questions. And as of right now, the Fed has a few of the governors within the Fed, which is kind of like a council, they've expressed a positive view as far as interest rate cuts for the month of July. So this is just part of trading stocks. You cannot be a stock trader or investing in stocks, whether you're a day trader, an active trader, a retail trader, or just trying to make extra funds trading stocks. You have to keep up on what's going on in the news and in the economy. So little things like this you have to be aware of. And this is something that I teach in the course in Udemy, as far as uh, having a routine every day before you trade. At the end of the trading day, you come in, you look at your economic calendar, see what's going on, any major news that's going to come out. That's going to determine if you're going to trade that day or if you're going to delay your trades or get out of any major trades that you're in, because news is coming out that really may affect the market. Now, the Fed is going to speak at 10 o'clock. It is said that they are expecting they're very bullish on interest rate cuts for the month of July. But you also have to take into consideration that the Fed has not cut the interest rate so far because of all the uncertainty in the market, meaning with all of the threats of tariffs, what's happening right now in the Middle East with Iran and Israel, and now the US is involved. There's a lot of uncertainty, so the Fed cannot definitely say, oh, we're going to cut rates, because we don't necessarily, or they don't necessarily know what's going to happen and what other things can affect the market. So with that being said, these, the bullish view as far as the interest rate cuts were on Friday and Thursday. But now on Sunday, the fact that the US did bomb Iran, we don't know if they still feel that way, or if tomorrow's discussion is going to be, we don't know, we're going to be in a war. So therefore, we're not very bullish on the interest rates cuts for the month of July. So those are things that can really affect your trades. And this is why, with this information coming out at 10 o'clock, and with everything that happened over the weekend and happened today, I would say, don't trade until after about an hour after the Fed speak. I'm currently in one trade, but that trade is electronic parts manufacturing. So therefore, I am not necessarily heavily concerned about, that particular stock being affected. So that's the first thing. The second thing that we want to look at, now that we know at 10 o'clock we have the Fed that's going to be speaking, and we probably won't jump in any trades until after 12 o'clock. The next thing we need to do is we need to look and see what stocks, what happened with the stock market day, what stocks we may want to possibly trade. So first thing we're going to be doing is we're going to come over here to our stock screener. And with the stock screener, what we're going to do is we're going to go over here and we're going to go ahead and filter. So we're going to filter our stocks. And if you have the free version, you can actually use the free version. And with the free version, we're just going to basically, we're going to go ahead and say $20 to $50. And from here, we're going to go to average volume of about over 2 million. And the next one, we will do technical, and we'll do our ATR. On the technical, we'll do ATR of about right over $2. Now, by doing that, we've gone from roughly over 10,000 stocks to 37 stocks. And we've done this over and over and over. And I know when you watch these videos, you may think it's repetitive. But like I said, I want you to get into the repetitiveness of just constantly doing the same thing over and over. Check your economic calendar, do your stock screener, and then we chart everything. And once that becomes repetitive and you stick to that routine, you have a better chance of making profitable trades. Now over here, we have 37 stocks, but if we were to go ahead and once again take out our healthcare stocks as well as our ETFs, and let me go ahead and filter that here, that would bring us from 37 stocks to just 16 stocks, right? And once again, we'll go over to technical and we would filter that by ATR because we want to get the stocks that's going to give us the highest possible ATR, which means the stock that moves the most. And over here, you can see the highest ATR stock that we have is going to be here, which is $9.49. And that's 16 stocks that we're looking at. All right. And this is what I would recommend. If you have a free account, you would filter those. You will have your 16 stocks there. And then once again, if you don't find any trades here, then you can go back here and you can adjust that price range from 20 to 50 to 50 to 100, right? And that'll give you more stocks. But since I have a paid account, I'm just going to go ahead and I'm just going to filter it from, because I can do custom. I'll do 10 to 100. Let's do 10 to 100 stock price point, 10 to 100. And from there, that's going to give us 73 stocks that we have to look at, right? And these 73 stocks, they also, that does not include your healthcare or your ETFs, because we're not going to trade any healthcare stocks or health service stocks, and we're not going to trade any ETFs. So we have about 73 stocks that we have to look at over here. Once again, we have our ETR. If we filtered our ATR from lowest to highest, this is what we will look at. But if we filter it from highest to lowest, which is what we typically want to do, because the first group of stocks that we look at, we want those stocks to be stocks that we want those stocks to be the stocks that's going to give us the best possible return ever. So as you can see with this particular stock, it moves for the last 14 days on average, it's moved $9.49. And it continues to go down all the way until we get to a point on page number 4 where we get stocks that are moving about $2.03 on a daily basis. So I would never really start filtering my stocks from lowest to highest ATR. I'll always go from your highest ATR to your lowest ATR. And the reason for that is because if you are a beginner and you're starting off your account with $300 to $500, you may only be able to buy one stock. So you don't want to buy a stock that's only going to give you a $2, that's only going to make a $2 movement for the day. You want to get a stock that's going to give you the most ROI, which is return on your investment, as possible. All right. So we're going to go through now and we're going to go to our, we're going to go to trading view and we're going to look at our charts and we're going to start going through and filtering and basically breaking down each one of these stocks, right? But one of the things I want to show you is this particular stock over here, all right? So we're going to go in and we're going to type in VOYG, correct? Yep. So with this stock, we see that this stock has a high ATR. And let's go ahead and update. Let's close that for right now. We want to, okay. So this particular stock right now has one of the highest ATRs. And this stock, okay, let's go here. All right, why is this updating? Okay, update to the latest version. And let's go ahead and refresh that. I'm going to reload. All right, we're doing this live here, so sometimes, things like this happen. But, I guess they had an update. Now, what we're going to be doing here, all right, let's go ahead and select the stock that we're looking at. Stock we want to get, GY. And here with this stock, okay. So this stock has the highest possible ATR. And the ATR on this particular stock right here is going to be about $9, right? So we have an ATR of $9.49, which means this stock moves an average of about $9.49 a day. And that's on average for the last 14 days, and we're on the daily time frame. What that basically means is we can get a good return on our money, meaning that stock is going to move either up or down on a daily basis of $9. But as you can see here, there's not enough history with this particular stock for us to be able to look at it and have points of support and resistance. So this stock, even though it gives us a high ATR, there's not enough information, meaning this stock practically just launched and was available on the stock market June 11th of this month. So this stock just launched on the stock market. That's why there's a lot of movement, but there's no real history that we can look at to say, okay, we have a golden cross, a dead cross, points of resistance and support. So this would not be a good stock to look at. Now, I already went through this list earlier, and I picked a few stocks that we can look at that I think we should add to our watch list so we can possibly trade instead of going through all 70 of them right now, because all 73 of them right now, because we wouldn't have enough time. So the first stock I'm going to put on our chart here is going to be OKLO. All right. And this is a stock that we previously had on our watch list, as you can see right over here. So we previously had this stock on our watch list. We had a yellow tag next to it because it was in a stock, it was in a position when we did this on Friday, which is, well, we did this on Thursday, which is going to be on this candlestick here. And what we were looking at is we said we knew the stock was coming down here when we set up on our watch list. We knew the stock was coming down, and we said, okay, if the stock comes down and it hits this line, which is this area of resistance right here, and it bounces back up, we would buy it. And then we looked at it and we said, well, if it breaks through, then we're not going to buy it. But we were waiting to see what happened with this particular candlestick right here. And then on Friday, which is this candlestick, it actually came down and it broke through it. So we didn't buy it. And this is the candlestick for today, because once again, we are on a daily time frame. So here the stock has come down and is closed below that area of resistance. And during the post market here, we can still see that it's underneath it. So this is going to stay yellow because what we're looking for is we can see right here, there's a true golden cross where the green line's on top and it's pointing up. The red line's at the bottom, but it's also pointing up. And therefore, this is a clear indication that we're in an uptrend. All right. But like I said before, no stock, okay, just goes straight up like this. No stock does that. Right. Typically, what happens is a stock goes up, it comes down, it goes up, it comes down, it goes up, and then it comes down again. But with this area right over here, once it passes through this area, it typically does not come back down through it. It typically goes back up. Right. But what's happening now is the fact that, and I'm going to draw this line. And when I draw these lines here, these trend lines, it's really just to extend so you can visually see how the current red line, which is the area of resistance, how it kind of comes across so you guys can visually see it. So what happens in a situation like this is where we have a strong breakthrough where it broke through this area of resistance and it broke through above that line, it typically would not come back down, right? And this right here, everything that we're looking here at the chart, right? We have our ATR over here, we have our moving averages, we have our area of support, we have our area of resistance, we have our golden cross and our dead cross here. All this is technical analysis, right? Meaning all this information shows that the stock is going up. And if we bought solely off of technical analysis, we would have been right. But what happens is you have the other part of it, which I always talk about, which is the fundamental analysis. Fundamental analysis is basically anything that's happening in the news or in the world, geopolitics, that could really truly affect the market. And I'm sorry, guys, the sun's kind of setting here, and I'm got to get some of these lights done over here. So you're going to see some shadows happening. But what happened here is during this time right here with this chart, this is Thursday, and then this is Friday, right? Israel, there's a lot of stuff happening in the Middle East. And then on Sunday, we had where the US actually bombed Iran and the market just kind of tanked, right? So this candlestick over here, one's for Friday and right over here, this one for Monday, this candlestick wouldn't necessarily represent what's really happening with our technical analysis, because this is not normal where the stock would go above your area of resistance and come back down and break through it. The reason that happened is because of geopolitics, because of what's happening right now in the media, what's happening in the news, what's happening in the Middle East. But this is not something that would normally happen, right? So what I would what I'm doing now is I still have this on my list to watch it, because as of today, Iran responded and tried to bomb or shot some missiles at a base in Qatar, and they only shot 14 missiles, which we know was being very conservative. They were not really trying to hit anything. It was just a response that they had to do for the people in their country to show like, hey, we're doing something, right? And we can gather that information from how we see things happening. So right here, I'm going to keep an eye on it, because as you can see, the stock at 4:30, the stock ended at 55.11, right? And the blue line, which you see says post, this right here means after the market closed to the general public at 4:30, there are still institutional traders, banks, and other individuals, and other individuals that are still trading, and they've actually bought the stock and they've pushed it up from the time it closed at 4:30 all the way up to 57.25. So tomorrow, I'm looking at this stock. We're in an uptrend here with the green line on top, the red line's at the bottom, but it's also pointing up. So we're still in an uptrend as of right now. So tomorrow, the stock can close above this area of resistance. And if the stock closes above this area of resistance, I'm going to actually look at buying it, because I believe that at that point, it's going to continue going up. So this stock right here would still be on my watch list as far as this particular one over here. The next stock that we have on our watch list would be NNE, right? NNE, I had a green line against it, right? And the reason I had the green line against it was because on Thursday, this green candlestick that you see here, that's from Thursday. This green candlestick, it closed above the area of resistance. I don't like to buy stocks and trade stocks on a Friday, because especially in today's economy with the current administration that we had, we already knew we were in, Israel and the Middle East fighting. The president came out and said, hey, we're going to give Iran 2 weeks. So you typically, and like I said, with our trading style, you want to buy a stock, and you want to buy a stock at the beginning of the week on Monday or Tuesday, or even Wednesday, and you want to be out of that trade by Friday. You don't want to stay into a trade over the weekend, especially if you are a new beginner trader. The reason for that is because if you get stuck in a trade over the weekend as a beginner trader with a $300 or $500 account, then something major happens over the weekend, like what happened over this weekend, where the United States bomb Iran, then the stock is going to tumble and drop. So you always want to be out of your trades typically by Friday. So this is what happened on Thursday. The stock closed above the area of support and resistance, above the area of resistance. Now, this candlestick right here is for Friday, and as we can see, and we're going to zoom in here, and let's zoom in a little bit, and let's move this over. So as we can see, this candlestick right here is for the red one here is for Friday. Friday, the market opened up here, and it came down and it closed right there on that line, which is the area of resistance. All right. Now, typically, if nothing major happened over the weekend as far as the United States bombing Iran, this stock should have opened up today above this area and continue to rise. But with all of the uncertainty, what happened on Monday is, well, today is the market, it opened up here and it started to drop. It came up, but it dropped back down here, and now it's here in this area, right? But if we look at it, we're still in an uptrend. We have the golden cross right here, which is the green lines on top and it's pointing up. The red line's at the bottom, and here it's starting to point up. So as you can see, the stock is moving up. We had a pullback here, and during the market at 4:30, it closed at 35.59, and post market close, the stock has gone up to $36.26. And once again, with what happened over in Iran, and they did not really truly try to attack the United States, they just shot 14 missiles, which we, like I said before, we know that they could have gone and done a lot more damage. We can see that the de-escalation is starting to end. And this is why we have our market makers, which are the big institutional investors and retail investors. Everybody's buying again because they understand that, hey, it's Monday, nothing major or crazy happened. The market's okay. We're not going to go to war. And we can start buying the market. So I believe that tomorrow, if the market closes above our area of resistance again, I would buy it and surely believe that the stock is going to go up to this area of resistance right here, which is going to be 47, unless another major geopolitical event happens, which we don't see anything happening as of right now. So I'm going to keep an eye on this one. And from green, I'm going to move it to yellow, because green typically means ready to buy, but right now it's not ready to buy until it closes above this. Okay. And like I said, you normally will not buy a stock on a Friday. So this right here was a perfect setup on Thursday. And then Friday, it still closed. It closed above it, but I don't buy stocks on Fridays. I don't like to be stuck in a stock. I don't like to be stuck with a stock over the weekend, especially with this current administration where we don't know what's going to happen over the weekend. But this stock, once it closes above this area, I would buy it, which is once it closes above the price point of $37.67. So we have two stocks that we're keeping an eye on, these two yellow stocks over here. And this is from our original watch list that we had. Now, for those of you tuning in for the first time, if you don't see a color tab next to it, it just means that this stock could be a good buy. It's close to being to a point where we can buy it, but it's not quite there yet. Yellow means it could be there tomorrow. All right. Green means it's ready to buy. So I'm just going back over the stocks that we had from our watch list as of Friday. Now, with this particular stock, when we look at it, um, here's another great example. The stock, we had it on our watch list. We will look, this green candlestick right here is for Thursday. We were looking at it on Thursday, and it was here on Thursday, and it looked like it could go above it. Now, keep in mind, when we have these lines here, okay, and the reason why we have this line here, which is this area of resistance, is we charted it based off of the 4-hour time chart, where we can see here with the 4-hour time chart, we have that area line of resistance right over here. So let's go back to our daily time frame, and all the stuff we cover when you sign up for our course on Udemy, and we discuss that in detail. So for those of you who have not taken the course and you're a little bit confused about what we're talking about here, if you were to sign up for the course and you took the course on Udemy, all this will be very clear to you. So Thursday, we had our green candlestick here. We had a candlestick here close right below that area of resistance. Friday, the stock went up to the area of resistance, but it came back and it closed down below it. Now, remember, like I said in our course, and I've said in previous videos, it doesn't matter if a stock, if the price point goes through that area of resistance. What we're looking for it to close above this line, above that area of resistance. Once it closes above that area of resistance, chances are it's just going to continue going up and it's not going to come back down. But it did go through it, but then it came back down and it closed right there below it. And then today, this is the stock for the candlestick for today. And then today it continued to drop. All right. So this is not a stock that I would continue watching right now. Uh, I'm going to leave it I'm going to leave it on our watch list, but I'm not going to change the color or put a yellow next to it because it's not in the area where it's close to our area of resistance. It's actually going in the opposite direction, and it could turn into what they call a dead cross, where it starts to go down into a downtrend. Right now, how can we see if it's going into a downtrend? One, the red line will cross over and be on top and pointing down, and the green line here will be at the bottom and pointing down. And so we're just going to leave that there. And then the next stock that we're going to look at is going to be CRDO. All right, CRDO. Now this one over here, we have this one in the green, and this was in the green from earlier last week, right? This from Friday, we had this in the green right here. And this means it was basically like a buy, ready to buy stock. So this meant on Thursday when we did this, we looked at it, we said, it could be in a buy position. And this is why we have the green, and it's still there in that zone. Because what happens here is we have our red line, which is that area of resistance. Now, remember, this black line right here is just a visual I put in there just so you can see how the red line would typically extend. So what happened is the stock price went up and it touched that area of resistance right up here, right? And then it bounced back down. And this is the candlestick for today. As you can see today, it just kind of hovered in that area. So tomorrow, what I'm looking for is I'm looking to see when the stock price closes above this area of resistance, not when it crosses through it, but when it closes above it. And once it closes above it, then I will buy that stock with the intention of seeing that the stock continues to go up, right? Now, this would be a new area, a new high for this particular stock, meaning that stock has not been this is the highest the stock has ever been as far as price point. It has never really passed this price point. So once we buy it here, we're not going to be able to clearly identify an area where we would sell it and take our profit because once it breaks through here, this is going to be a new high. It's never been this high before. Once it breaks through that area, this is the highest it's ever been. So we're waiting to see if it breaks through here because once it breaks through here, it's just going to fly. All right. Once the stock closes through here, it's going to fly and then it's going to identify a new area of resistance where it would probably drop and come back down. And we can tell that this is in an uptrend because once again, the green line's on top and it's pointing up. The red line's at the bottom and it's pointing up. And we can clearly see that it's in an uptrend. It hit that area of resistance and we're just waiting for it to close over. And over here, yes, here, well, let's zoom in a little bit. Once again, this red price is the price that it was at 4:30 when the market closed. This blue price is the post market price, which is it went up to 85.90 after the market closed. Your big institutional traders and people that actually have access to the market to trade after hours, they've actually bought the stock, pushing it up some more. So tomorrow it's roughly going to open up right here at 85.90, if not higher. And that's what we're looking for, it to close above here. So this is basically a green, meaning keep an eye on it. And this is more than likely going to get traded. Now, for a stock like this, what I would do is I would look at that stock about 3:30 in the evening tomorrow, and about between 3:30 and 4 o'clock, or as close to 4 o'clock as possible. If the price is above this area, then I would buy it, knowing that at 4 o'clock the price would close above it. Right? I would not buy this stock at 2 o'clock or at 3 o'clock on the dot if it's above it, because it can still come down. But 3:30, 3:45, if the price is still above it, then I would buy it there because the chances are very good that the price will close above the market price. Because if I don't buy it at the 4 o'clock or 3:30 tomorrow, what's going to happen is on Wednesday morning when I go to buy it, the stock may be a lot higher. right? And the goal is to buy it as close as possible to your area of resistance. The reason for that is, let's zoom this in. Right. Now, remember, I'm not showing you this from the point of view of a uh, seasoned trader. I'm showing it to you from a point of view of a beginner trader. You want to buy it as close as possible to this area of resistance. Because if I buy the stock at this price, for example, right, which is going to be, let's put it down to 87, right? Let's say we bought it right here at $87. If I bought it here at $87, I know I can set my stop loss right here at $86.44, right? Meaning I would only end up losing roughly 62 cents for each stock that I bought. So if I bought one stock and I bought it at here at 80 at the price of, let's say here, if I bought it here at the price of $87, right? If I bought at the price of $87 and then it drops down to, 86.44, I've lost about 60 cents for each stock that I bought. So if I bought two stocks, then I lose $1.20 if it went in the opposite direction, and then it automatically closes out, and that's my stop loss. So I've put for each stock, I've only put 62 cents at risk. But if it continues to go up, then I have a possibility of making a lot more money. So you never really want to buy it if it breaks through here and then you buy it all the way up here at $90 at, let's say, at $90. Where you're gonna set your stop loss. You're gonna set your stop loss all the way down over here at $86. So if you bought it at $90 up here, and you have to set your stop loss right here at the bottom at $86, then you have a chance of losing what, $4 per stock. So that multiplies that over time. So if you had 10 stocks and you multiply 4 by 10, right? 4 times 10, that's going to basically be $40 that you just lost. So you always want to buy it as close as possible over here so you can set your stop loss right here and don't put that much money at risk. Because if you bought it up here at the $90, the stock, for example, and let me just draw that in so you can see a visual. That stock, even if it goes up this high, it has the potential to come down as low as this the first time around and then go back up. But there's no saying that if it comes down, it may not break through. So that's why you always want to buy it as close as possible to this. You don't want to buy it too much higher. That's why sometimes I would say at 345, if you notice, like tomorrow at let's move that. So tomorrow at 3:45, if I see that, and I'm just doing that so you guys can visually, like, once again, just so you guys can visually see this. So tomorrow at 3:45, if it breaks through here, and this is why you see this yellow line here. This is my alert. For those of you who have not watched any of my previous videos, this is my alert. It's once the price breaks through this yellow line, it's going to send me an alert to my phone or to the computer and say the price is broken through it, and I'm going to keep an eye on it. And right before the market closes, if it's above it, I'm going to buy it. Okay, I'm going to buy the stock, and I'll just ride the waves up to see where it goes. So this one's going to stay a green. Now, United Airlines, which is right over here. This is another one that we have on our watch list. And with United Airlines, as you can see, this blue line is something that I drew here. So this is your area of resistance, these red lines, meaning as you can see, the stock goes up, hits the area of resistance, it comes back down, and then it goes back up, it hits that area of resistance. And as you can see here with the blue line that I have drawn here, this is basically our area of support, right? And in the course, we talk about, let me just fix that. All right. So in the course, we talk about identifying your area of support and resistance. So as you can see, the stock started up here. It went up, hit that area of resistance. It bounced back down, hit an area of support, which pushed it back up, hit an area of resistance. It came back down. It hit that area of support. And here you can see the stock is going back up. It hit it, and now we have a green candlestick, and it's pointing back up, right? So if we put that on a 4-hour time frame, so this red line I drew in, this blue line I drew in, but if we switch it over to a 4-hour time frame, you'll see there's a blue line here that the system drew in, and this is my blue line that I drew in, and this is the red line. So as you can see, even on a 4-hour time chart, we can see that we're in what they call a sideways trend. All right, it's not going up or going down. The trend is basically going sideways, and then eventually it's either going to have to break through and go up, or it's going to have to break through it and come down. But to the fact that we went up, we came back down, we went up, we came back down, and now we can see that we're going back up in the uptrend. If you were a seasoned trader and you knew what you were doing, I would say you can buy it here at this current price that it's at. All right. Hold on a second. Let's delete that line. I would say that you can buy it here, wait for it to get up here, and you can make some profit. Because right now the current price is 76.90, right? So I can buy it at this price and then I can sell it right around here, around $82, right? And I can make a profit. But as a beginner trader, somebody who's new to the course and not able to sit here in front of a computer like I can and watch the market all day, I would typically set where I have my yellow line right here above this area of resistance. I would tell you buy the stock here at above this point. If you were to buy the stock here at this price, which you can, you would want to sell it right before it gets to this area of resistance, which is roughly about $83. You want to sell it at. And once you sell at the $83, you wait to see if it breaks through, which more than likely it looks like it's probably going to break through. And if it does break through this area of resistance here, after you sold it at 83, then you can buy it again over here at this price point, which would be roughly what, 86, $85. Then you could buy it once it closes above that area of resistance, because there's no guarantee that it's going to hit this area of resistance and break through. But the chances are, because it's proven itself several times, it's probably going to hit it and bounce down, but there is a chance it could break through. So you could buy it here, sell it right before it touched that red line, which is the area of resistance, and then buy it again. So this area of resistance right here, this red line, is going to be $83.31. You can sell it at that point, and then you can buy it again at $85.50 once it closes above that area of resistance, if that is, that's something that you want to do. But I would recommend, as a new trader, you buy it up here. I'm going to buy it here, depending on how it looks tomorrow when the market opens up. Because once again, in the morning when the market opens up, it could stay. I mean, right now the price point is 76.93, right? But just like how with the other stocks that I showed you, which is here, we have your, let's see here. Yeah, so they already took them down. So just like with the other stocks, we have your post-market trades. We have what they call the pre-market trades. The pre-market trades it starts typically about like 7 o'clock, and institutional traders and other traders who brokers give them access to trade before the market open. They can start buying this stock at the $76.97. They can start buying it early, and then by the time we look at the market at 9:30, when the market actually opens up, the price may be 77, 78, $79. So you want to take a look at where the market price is. But I know that for me, I'm probably going to go ahead and buy this stock at market value, as long as it's under 79. Because even if it's under 79, I know I can make a $3 profit. Well, it can not a $3 profit, but I can make a $3 move from the 79 all the way up to 83. So that could be roughly about $3 to $4 movement. It can make that in one day, because when we look at our ATR here, we know that this stock, based off this ATR right over here, this number right here, look at where the mouse is at. If you guys taking the class, then you know that here, this means this stock on average moves $3.74 a day. All right, when you look at this ATR right over here, all right over here at the bottom, this stock actually moves about $3.74 a day. So I know that if I bought the stock here, even if I bought it at $79, if the market opens up at $79 tomorrow, I know it could still probably hit the $83 price or even higher, because on average it goes up about $3.74 a day. So this is a stock that I would keep an eye on as well, United Airlines. The next stock that we're going to look at from our watch list would be here, this particular stock right here. So here we can see, and for those of you who have not watched any of my previous videos, you know that this is a previous watch list that I had from last week. And this was last updated on Thursday evening, because I don't do videos on Fridays. On a Friday evening, like I said, I don't like to pick stocks or buy stocks on Friday. That's why I don't even do videos on Friday. All right. So this black line that you see here is something that I drew in from last week. Now we're looking at it from the daily time chart, right? So we can see where the stock has gone up and it's consistently hit our area of resistance right about here on our daily time frame, and it hasn't broken through yet, right? And what we're waiting for is, this is why we have this yellow line here. Okay, now let's make this a little bit bigger. This yellow line that you see here is my alert. So I'm telling the system, at once the price point goes above $84.53, and it alert me so I can keep an eye on it, because once it closes above this line, above this area of resistance, the chances are more than likely it's going to continue going up, right? And how I identified that is just visually, I can see that it's like a consistent area. Like, let's draw this over. Let's stretch this over here. We can see that this line, and let's make it straight. Okay, let's make it a little straighter. It's still a little crooked. I'm using a new mouse here. All right, so there we go. All right. So this right here, we can tell that this is a constant area where it touches it and it comes back down, touches it and comes back down. So we're just waiting for it to break through it. Now, this candlestick and any candlestick for today, any kind of movement like this particular candlestick, and any kind of activity that happened in the stock market today, I don't look at it as a true representation of the stock itself, because when the market opened up today, investors were reacting to what happened in Iran on Sunday. So therefore, a lot of investors, they may have not traded stocks. They may have cashed out some of them because they were fear of what was going to happen. But later on in the afternoon, everything kind of cooled down. But how I identified that is, if you look at our 4-hour time frame, you can see this red line right over here. That is an area of resistance on our 4-hour time frame. It clearly identified that. But once again, on the daily time frame, our area of resistance hasn't popped up. And if you look at the previous video, I believe this is the video from Thursday, I show you how a area of resistance would first appear on a 4-hour time frame, and maybe 10 or 11 days later, that area of resistance would show up on a daily time frame. Uh, so so I would recommend that you go back and take a look at some of our videos. So I have a yellow line set up right over here to say, once that stock price gets above there, alert me, because once it closes above this area of resistance, I'm going to buy it. We know that we're in an uptrend because we have the green line on top and it's pointing up, red lines at the bottom and it's pointing up. So that clearly lets us know we are in an uptrend until there's a crossover. So right now, this is a stock that I would probably put in a yellow to say, hey, you know what? I'm going to give you a yellow tab. And here I have 1, 2, 3 stocks that I'm watching. Tomorrow, I might jump into these 2 trades right over here, which is why they're green. These other 2 stock, this other stock over here, AL Lab, I'm not going to do anything with it right now because it doesn't show that it's in a clear up or down trend. Now let's look at what we have. 2 more stocks up here. Let's take a look. We didn't see those earlier, did I? That's going to be SMCI. I think we looked at this one right here already. I was doing some research earlier. Okay, so with this particular stock, we're not going to really do anything with it right now. We're also going to leave this one blank. The reason for that is because we clearly identified our area of resistance right here. We had this labeled, and this green one right here was for Thursday, and then this right here was Friday's candlestick. And with Friday's candlestick, it was still going up, but once again, because of what happened over the weekend, today, this is Monday's candlestick, which is today's candlestick. As you can see, it came down. And so what we're going to do is we're going to keep an eye on that for tomorrow. And the reason why it's still here is because we look like we're in an uptrend. We have the green lines on top, it's pointing up. The red lines at the bottom, it's starting to point up. But today's activity is not a real indicator of what's happening with the market. So tomorrow, I'm hoping that we can see it go back into the uptrend, a clear uptrend, and possibly test this area of resistance. It's already tested it once. It's kind of tested it twice here, another time here, which is the second time. So once it goes back up to test this area, it should break through, especially now that we're in an uptrend. But we'll see what happens with this one. And this is a chip manufacturing, computer hardware processing. So this really shouldn't be affected by what's going on in the Middle East, because if they're creating chip parts, that's really doesn't have really much to do with the Middle East. All right. And now another thing that I'm going to show you is something that we talked about in our class on Udemy, it's more so another a clear indicator of if we're going to be going back into an uptrend is right here with this particular one right here, your RSI. Right now, the RSI is directly on our 50 line right here. This is why you see it right here. This is basically in the 50 line. Well, as you can see, it's actually 40. Let's put it right here. It's actually going to be 48.18 if you go right over here to this point, right? 48.18. So if it starts to move back up in this direction, that basically is going to be a first indicator that the stock itself is going to start moving back in the upward direction. Meaning, as you can see with the uptrend, it typically stays above this part, this dotted line here. Now, once it goes below that dotted line and it kind of starts going down here and hitting up here to the middle point and keeps coming down, we know we're in a downtrend. But right now, it's here, but we can expect it to go back up. But that's something a little bit more technical. I'll be doing a class on that on Udemy probably in the next few weeks or a month or so. All right, but right now we're just going to keep an eye on that. We have our alert set up for right over here if it closes above this line. And the last one is going to be GTLB. GTLB. All right, so here we've identified clearly that this is an area of resistance. This is an area of support. Now, the stock has come down to this area of support. So we have an alert set up right over here at 39.13. Once that stock gets right now the price is what? Right now the price is 40. Right now the price is 40.17. And if it can come down just a little bit lower, because right below here is 37.26, right? So if it can come down just a little bit lower to maybe 38, if it comes down to 38.50, 38.64, I would buy in this price range, because then the expectation is it's going to hit this line and bounce back up. And I would set my stop loss right over here, right underneath that. So meaning if I buy it over here at 38.50 and then it comes down to 37.50, then I've only lost $1 for each stock that I buy, for each quantity stock that I buy, and therefore I don't lose that much. But the chances are it's more than likely going to hit it, and it can come back up and bounce back up, right? But right now we do see that we are in a dead cross, but it's not a true dead cross, all right? And this is something that we talked about in our course, right? So we'll keep an eye on this one to see if it hits this area of support and it bounces up. And and the thing about it is, if it breaks through and it starts to fall, I would probably put an option trade, but we've never talked about option trades. But you could make money when the stock is going down. So here we have our list of stocks that we're going to buy. So we have 2 stocks that we're going to buy. Well, not buy, going to buy, but we could possibly buy tomorrow because they're getting in position. And then we have these 3 stocks which are in yellow. We're probably going to end up buying them this week. If not tomorrow, we most definitely, more than likely, probably be in position to buy those by Wednesday. All right. So those are the stocks that we have for right now. Now, if we go back to this original list right over here, which is we have a total of 73 different stocks that we have to look at. Is there any additional stocks here that we need to add? Yeah, we have a few that we're going to add over here. We're going to be adding in, which stock is this one? This one over here. We're going to add this one in. Let's take a look at that one right here. What stock is that? We're going to go in here and we're going to type in MRVL. All right, let's go over here. Marvel. Let's take a look. I think I had somebody send me a message. Nope. Okay. All right, so let's go here. Let's take a look at this particular stock over here. All right, so why is this stock here on our list? All right. Nope. This stock has no reason to be here. Nope. The stock has no reason to be here. We don't need to look at this stock. It's not really in a position right now where we can clearly see that, there's an area of support or resistance. And once again, so yeah, this stock, we wouldn't even bother looking at it. Any additional stocks that we want to look at? Let me just take a look at my list here. Nope, that's the only stocks that we have right now. What else do we have? All right. So one of the things I would tell you from our course is you have stocks like El Toro, and like El Toro is a stock that popped up on our list, right? And El Toro was right here, number 6. We have an ATR of $5.67, right? And El Toro, so the stock moves up or down an average of $5.67. Now, because the stocks move like that, you may say, oh, wow, that's a good buy. It fits most of the criteria that we're looking at. But here's the thing, El Toro just got listed. El Toro really just got listed in May 14th. So there's not enough history for us to clearly identify and say, this is a stock that we need to buy or we need to keep an eye on. Because we need stocks that have a history and have been proven, that have proven areas of support and resistance. All right. So once again, we have United, and we have this particular stock over here, CRDO, that I would tell you to look at. Um, in the other ones, I would probably keep an eye on. But if you've taken the course, you kind of understand, why we did what we did, and you understand what I'm talking about. If you're new to trading, you've never traded, or you haven't taken the course, and you're trying to understand about some of the indicators that I have on my chart here, which is like, this is a very common indicator, which is your support and your resistance. And support basically means the stock typically comes down to that area. And for whatever reason, most traders, we look at it as an area of support and we buy it at that point and it moves it up. And our red lines are your area of resistance, meaning typically once it gets to that area, most traders end up selling and taking their profit. And so sometimes we get caught up in a sideways trend like this one, right? And then we have uh, your golden cross, dead cross, right? And this is kind of based off of your moving average, your moving averages. So here we have a golden cross. The golden cross is basically where you see right here we have a red line on top, and we have the green line at the bottom, right? And then as soon as we have a crossover where the green line comes on top, the red line's at the bottom, and the green line pointing up, and yet the red line's at the bottom, but it's also pointing up. That's called a golden cross. And the reason why it's called a golden cross is because once you see that crossover, the chances are the stock is going to be going up and there's a chance to make money. So you're going to be making money. You're going to be seeing gold. So here you can see when we had the red line on top, the green line at the bottom, the red line's pointing down, the green line's pointing down. You can see we were in a downtrend. As soon as we have that crossover where the green line gets on top, the red line's at the bottom, but both of them are pointing up. Look at the stock. The stock just continues to move up, right? It just continues to move up. And then once it starts to move down, we have what they call the death cross right over here. The death cross is where the red line comes on top and is pointing down, and the green line comes at the bottom and is pointing down. And the reason why they call it the death cross is because you're basically going to be losing a lot of money. And this is an indicator that we show you how to set up on your chart on TradingView. Right now, when you take the course on TradingView, you do have, every software that you see us using here. TradingView, there's a free version and there's a paid version. I use the paid version because there's a lot more things that I want to do um, as a seasoned trader. As a beginner trader, you can use the free software and you can get this basic amount of indicators on there. For our stock screener, which is here, there is a free version and there's a paid version. And you can use the free version and still do some of the same things that I'm doing, as well as with investing.com, where we got our economic calendar. So, but these you'll have to pick and you'll have to pick which indicators you want on there. And I show you on our course which indicators you need and how to set them up. So with this indicator, it lets you know right here, once you see, like here, we can watch and we can say, okay, we're in the uptrend this whole time, right? And then as you see here in this section, as the two lines come closer and closer together, and then you start to see that hump down over here, and you can still see that you're somewhat still in the uptrend. It didn't just drop. So right in this area, once you see them starting to get really close together, you say, you know what, let me just sell the stock and get out of it. Because at this point, we know that it's more likely going to be a dead cross where it's going to start coming in the downtrend. And right here, as you see, they start getting closer together. They went from being further apart and going straight up to kind of like leaning sideways and getting closer together. The stock just drops. And here, as the stock drops, okay, do I have the messenger turn on? Oh no, yeah. Okay, as the stock just drops, there we go. Okay, and then over here we have somewhat of a golden cross where we have the green line now crossed over, and you see it went from a downward trend and now it's starting to go into an uptrend, and we have the golden cross where the green line is now on top and the red line's at the bottom. But the reason why I said I will not buy it here for sure is because even though the green line's on top, it's not pointing straight up. And the red line's at the bottom, the red line is somewhat pointing up, but it's not pointing straight up. Now, once both of these are pointing up, we know we're going to be in a clear uptrend. And this is what I would call a false golden cross. All right. So that's going to be it for right now. Also, I just to touch on one other thing, the ATR, which is right over here, right? The ATR, you hear me talking about the ATR a lot, right? And if you look at some of my previous videos, I talk about the ATR. You want to buy because this particular stock right here makes an average movement of about $3.74 up or down. So you don't want to buy a stock with a low ATR because you may buy a stock and you get stuck with a stock that's only moving, you know, 25 cents a day. And that's why, in my course, I teach you guys about the ATR, and I'm always filtering all of my stock picks. Like as you can see here, I filter them by ATR because I want to get the stock that have the most amount of movement on a daily basis rather than buying a stock that only moves $1 a day or 25 cents a day. I'm not going to make any money off that stock, and I'll be sitting on that stock for days and it doesn't go anywhere. So you want to get familiar with FinViz, and rather than you have two ways you can do it. There's plenty of videos online with YouTube that actually show you how to use FinViz, or you can take the course where I show you not only how to use the FinViz, but I also show you how to use TradingView and bring everything together. So this way you could be able to pick and get some really good stocks. As you can see here, we have about 73 stocks that we're looking at with the price range of $10 to $100. And we were able to filter that down. And if we take out this price range and we move out this filter right over here, right, and we just say any, and we take out our ATR, you'll see that we were able to filter that down from over, let's go over here, from over 10,000 stocks, from 10,150 stocks, we were able to filter it down to 73 stocks instead of you having to go through every single one of those stocks. And from the 73 stocks, those are the stocks we basically found about, nine stocks that we were looking at. I'm sorry, 7 stocks that we were looking at out of 10,150 stocks, right? So FinViz, as far as a stock screener, is something that you absolutely uh, want to familiarize yourself with. And there's a lot of information here, but like I said, my course is really targeted towards beginner traders, people who've never traded stocks before, or individuals that are really self-taught and never traded stocks before, but they just want to learn how to trade stocks and how to use these technical indicators rather than just buying stocks blindly. That's going to be it for right now. If you have any questions, guys, my email is on my YouTube page. So you guys can email me directly, or if you want to, like I said, you can go over to Udemy, sign up for the course. When you sign up for the course, you can message me at any time, and you're guaranteed 6 months to my private YouTube lives where you can ask me any questions regarding any stocks, and we would actually break it down and go over any particular stock that you're interested in. Okay. Matter of fact, somebody had asked me about Tesla the other day, earlier today. Let's see here, Tesla stock. I think somebody had asked me about Tesla. Okay, so let's take a look at the Tesla stock, because Tesla stock was down and it came back and it's going back up. So here we can see this is a really good stock to look at. For example, this Tesla stock has an ATR of $18.67, meaning this stock on average for the last 14 days moves $18.67. It either moves up or down about that amount, $18.64, right? So here we can see that we're in a golden cross where the stock is just broke through an area of resistance. It's going up, all right, and right here we see that it's going up here. They just released their Robo, which is their self-driving Uber type vehicles. So the stock shows that it's going up. Here on this right here, which is the RSI, it shows that it's above the 50. So with the Tesla stock, I don't like to trade these stocks over here. And I'm just talking about this because I had somebody that asked me about it, and I told them I would review it. You could buy this Tesla stock here, but I don't like to trade stocks like Tesla, Walmart, McDonald's, because these are very popular stocks, and anything that happens in the market could really affect them. Like, as you can see, when Donald Trump and Elon Musk was fighting, the stock just dropped, right? It's too much of a public stock. And Tesla doesn't normally drop like this, but it did. And then you have to the point right now where Tesla was an upward trend. Nobody knew what was really going on with him and Trump. The stock really was in a clear clear uptrend. And even here, when it was in an uptrend, it just, for some reason, it just dropped over here. And then as soon as they release this information saying, "Oh, we have a new robocar," it goes up. So tomorrow, God forbid, somebody says, "Hey, one of the robocars got into an accident and somebody got hurt," or God forbid somebody dies, it's automatically going to affect this stock because it's such a publicly traded, it's such a like a public figure stock that, or well-known stock, that's going to cause the stock price to drop as well. So Tesla right now, if everything goes well and there's no real bad news that happens, yes, the market, the stock can continue going up. But like I said, with these new self-driving cars on the road right now, if something was to happen, God forbid, an accident, somebody get hurt or killed, you can expect that stock to drop. So right now, until they really perfect the technology or anything, like right now, with it just rolling out these new cars, and that's the only reason the stock is up today. And you can tell from these lightnings right over here, it tells you, it tells you any kind of like news releases right here. Oh, wow. Oh, 1 hour ago, Tesla sued over Model S crash that killed 3 people in New Jersey. I did not even. So I would have to so you would actually have to click into that, see when this happened. Is this is old news? Is this new news? And somebody may just be suing them right now just to affect the market. So I like to see how the market responds to that tomorrow. Okay, so that's why I would not trade Tesla or any really publicly traded stocks. All right, that's it for today. You guys have a wonderful day, and I will see you tomorrow at 7:30 same time, and we'll see what happened with the stock picks that we have. You guys have a wonderful day.